Okay, good morning, everyone. Thank you for joining me for today's episode of the Market Snapshot series. Today is the 30th of October, a very lovely morning. And of course, we are back to the markets to see how things are moving. You can just send a hi there in the Q and in the live chat section, and we'll be able to come to it. So, looking at the markets today, and so far this week, we've been having a lot of good surprises on the markets. One of them, of course, is when you look at gold. We've been seeing gold doing pretty well. Gold is currently trading at about 2782, and of course, it's pricing in that uncertainty that we talked about yesterday on the FX Space Twitter space. You can go and have a listen into it. Gold has been performing relatively bullish. That is, of course, ahead of the US election. We're also seeing relative dollar strength. That is despite yesterday's lower, job openings data that we got from the US. The number came in much lower than expected, but despite that, we've seen a relatively strong dollar. DXY is currently trading at about 104.2. GBP USD, however, is showing a bit of strength in spite of the strength of the DXY. There could also be some likelihood that maybe the dollar is starting to turn around to sell, but we are going to get more confirmation when we get NFP on Friday for us to see how else we need to see price action. Now, of course, ahead we have the GDP report, which is also going to be coming out at about 3 p.m. today, and it's going to give us more insights about the strength of the US economy. Of course, if we do get a strong reading for the GDP numbers, we shall see, then we shall expect some resurgence there for the dollar ahead of Friday's NFP. Now, looking at the indices are looking relatively choppy. Of course, we're having a relatively stronger Nasdaq as of Euro session today. That's after the strong earnings we got from Google, as well as also the strong earnings we got from AMD. AMD, however, is down about 7% in after hours trading. Still not sure what caused the sell. Likely because the markets were not too happy with the results, perhaps that came out for AMD, despite us seeing a hit on earnings, but we shall go into the earnings to see. Now, looking at the other indices, DAX is having a hard time. It's down about 0.4%. That was after Volkswagen reported a 64% profit miss. Volkswagen has also indicated that they are likely to close some of their manufacturing plants in Germany, which is actually its home country where the company was started from. So we're still not sure what's really happening with the company. Some people are saying that there is generally a bit of sluggishness in Europe's biggest economy, but we are yet to see what's going to come out of that. But the DAX is not trading too well today. It's down about 0.4%, and we're not seeing any signs of bullish momentum there. But Nasdaq is looking a bit different. Dow Jones also looking relatively choppy, holding price action around there as we head into the US elections next week. Cryptos are off to the rally. We are seeing Bitcoin finally breaking above 70,000 like we spoke about in previous snapshots. And now we are yet to see the crypto bull market beginning. And I think around this time is when we can keep an eye on the cryptos. Meanwhile, for those of you that may not be aware, we can actually trade cryptos on FX Space's MT5. You just have to go and search for the crypto you're interested in trading. Then you can open up a trade on it. The margin requirements for trading cryptos are really low. You can open up a trade with even as little as $1, $2 margin. And we're looking at the smallest possible lot size of 0.01. So the cost of trading with FX Spacer is not high, so you can be able to afford to trade. Now, today we have two reports. We have the ADP, but most importantly, we have the GDP. So the ADP is also going to be crucial for direction today, especially on assets like gold, on assets like GBP USD, Euro USD. The ADP number that we get is going to influence that. Last time we got ADP, we actually saw a very strong dollar. If you come and check on the DXY on the daily, you see that the ADP number got released for the month of September. That was, let's give it a moment for the chart to load. Okay, so the last time we got ADP, we got a hit on ADP. That was a number of 142,000. And then the previous was 99K, revised higher to 103K. And the resultant move for the dollar was an upside move after the ADP number we got. Now, I'm looking at the numbers for ADP. Previous was 143,000. We have forecast of 129,000 and a consensus of 115,000. So from where I sit, the markets are currently forecasting a potential decline on the ADP number from 143,000 to 129,000. So if we do get an actual number in line with the forecast, then that's definitely going to spell more weakness for the dollar. If you look at the DXY also, you can see that we have almost like I would say an inverted indecision candle with a very long wick to the upside. Typically, when you look at candlestick analysis, this is usually a sign of buyer exhaustion. Previously to this daily candle that is in focus here, we also had a double top on a DXY, indicating that we could see a bit of reversal. We had initially a bullish engulfing that was on the 25th of October, if you're looking at the daily chart on DXY. But despite that bullish engulfing, the next candle was an indecision candle with a very long wick to the upside that followed it. And now we are already seeing signs of bearish momentum on the DXY. So now I leave it to us. Is it likely that a DXY is now starting to turn around to sell? Initially, we discussed that the previous times we've had elections, we have typically gone into a relatively a period where we've seen a weak dollar. Yesterday, during a Twitter space, we had a lot of discussion around the dollar with a number of speakers indicating that the dollar could sustain a bit of strength. Most importantly, if it does get a weak NFP report, rather a strong NFP report. Now, let's just briefly go back to 2020. I know we've been there several times. Some of you must be fed up of me going to see DXY in 2020. But anyway, we need to go there because we need to remind ourselves, how the DXY has done previously around this time. So 2020 and 2024 are really similar years. And of course, this is due to, first of all, the US election, and also due to the rate cuts that were done by the Federal Reserve Bank, which is the central bank for the US. So you can see from around the start of November, we're looking at around 2nd November, we saw a very, very strong downtrend for the dollar that sent it lower up to about 7th January. And then from 7th January, we then started to see the DXY making a bit of an attempt to move higher. Now, there are a couple of things to take into consideration. One of them being the potential weak NFP that was released around that time. Given that it was a COVID year, it's likely that the US economy was not doing too well, and that reflected in the value of the DXY. This time around, it's different. That's why I need to put a caveat there. Guys, if the previous data we've been getting, September for the US, September, we're now going to get October data. The US is in a very, very strong position right now. If you look at the data we've been getting, okay, maybe aside from the inflation, which seems to be declining, but we all know that relatively declining inflation is usually good for the real value of a currency. That's what textbook says. When the inflation is increasing at a decreasing rate, okay, when it's not too hyper, it's a good thing for the currency because it does not erode the value of the currency. I suspect that's one of the reasons why we are seeing that strength in the dollar. Now, we need to keep an eye to see what happens with NFP for us to see how to trade the dollar. However, intraday trading today would be that if we get a weak GDP report, we can then initially look to sell the dollar. For Euro session trading today, I'm already seeing the pound dollar looking a bit bullish, as we shall be able to go over the MT5. Euro USD is actually rallying right now from where I sit. We shall also go over that on the charts. Yeah, okay, so back to the calendar. So ADP is out of the way. Now we have the GDP. So for GDP, the focus is looking at this particular number here that has the red. This is on trading economics. We are looking at GDP growth rate quarter over quarter. I don't know what this word stands for. Is this advanced? Is it okay? I don't know what it means, but it's Q3. What's most important is that we're looking at a Q3 growth rate number. Okay, so we are looking at the growth rate of the gross domestic product, which is valued in USD terms. We are looking at the rate of increase, rate of decrease. So it can be an increasing rate or a decreasing rate. Now, when you look at the forecast is 3.3%. Previous is 3%. We are now expecting an actual. If we are looking at the actual in line with the forecast, the market is expecting an increase or a bit on GDP from 3% to 3.3%. So if we do get 3.3%, 3.4%, if we do get maybe a hammering GDP of 4%, that will spell dollar strength going into the NFP. Now, I wanted to mention this on Friday, but I think maybe let me just mention it now. The NFP forecast is that we get a lower reading for NFP. So I don't know whether the market is going to start pricing that in now or it will wait for later. I'm not too sure, but I just wanted to let you guys know that if you see some strength in the dollar, it could be because of that. Now, let's speak a little about USD CAD. USD CAD has been under immense upside momentum. I have some clients of mine who we had a couple of nice setups for sales on USD CAD, but of course they didn't play out simply because of the strength. The weakness actually of the Canadian dollar. It's more about the weakness of the Canadian dollar and less about the strength of the dollar, because we do know that we have been seeing the pound dollar and euro dollar exhibiting strong upside momentum despite the strength of the DXY. So Bank of Canada's governor, he's called Macklem. Yesterday he made some comments. Today I'm seeing he's also on the schedule. But yesterday he made some comments and he indicated that the Bank of Canada is ready to move ahead with more interest rate cuts if the data tells them to do so. Now, take note that as of today, Bank of Canada has had 4 consecutive rate cuts, with the most recent rate cut being a jumbo supersized rate cut of 50 basis points. That has really done a little to if you, for instance, if we are in swing sales for USD CAD, we've been seeing a bit of USD CAD has had a hard time selling because of that reason. The Bank of Canada is cutting rates aggressively, and we are seeing that reflecting in the value of the USD CAD. USD CAD is looking very bullish at the moment, despite advancing. We are seeing on Euro USD and GBP USD. So that's pretty much it for today. Maybe to speak briefly about the crude oil inventories that we have been seeing. The consensus is that we're going to see relative declines. Just early this week on Monday, we got a report that the expected attack or hit on the Iranian crude oil facilities missed, and we saw oil crashing about 4%. And we are also seeing that that is of course reflecting in the price of oil and also likely reflecting in the value of USD CAD. Remember, the Canadian dollar is an oil currency. So whenever we get weak oil, we usually get a weak Canadian dollar. So that's one of the things that we need to take note of. That could also be the reasons why we are seeing a weak value for the Canadian dollar. Anyway, let's move over to the Google earnings. So yesterday, Google reported earnings, very, very strong earnings. And we have also seen the NASDAQ rallying up to 20,600. It's looking quite bullish, all because of those earnings we got from Google. So some of the main drivers for Google's hit on earnings or contributors to their bottom line was, first of all, the Google services. So Google has many services that it actually gets revenue from. Some of them include Google subscriptions. We also have the YouTube ads, which are, of course, companies pay for, or you can also pay for ads. Then we also have Google Cloud, which of course I'm sure some of you pay Google Cloud. They make money from that. We also saw Google had an increase on the operating income as well as also the operating margin. The net income also increased. The net income increased by 34%. We also had an increase on EPS. Now, one of the main reasons why Google was sharply up after hours, as we shall see, was because of the comments by their CEO that they want to invest in AI. We also got that Google also in the next recent quarter, they expect their capex to increase, which of course is indicating to us that it could be that Google would want to maybe partner with NVIDIA to get into this AI buzz. Now, Google has an AI of its own called Gemini, and I think they want to see how they can leverage Gemini to increase their revenue. Now, here they are saying in search, our new AI features are expanding on what people can search for and how they search for it. In cloud, our AI solutions are helping drive deeper product adoption with existing customers and attract new customers with win larger deals. So AI is a really big thing. Of course, one of the concerns, especially going into the next quarters for these companies, is how can they actually provide value to shareholders or provide, profit maximization through this AI. We are seeing them increasing on their capex, having maybe more costs going to R&D, but will that translate into income? We're not too sure about that. However, Google is performing really well. After hours, Google was up about 6%, and we're of course seeing how NASDAQ is doing. Now, when you go to AMD, AMD is a completely different story. I don't really know what's going on in AMD, but AMD is down about 8% actually. It's a complete disaster for AMD post earnings. I do not know why, but it seems not to have affected the NASDAQ, as we shall see on the MT5. The NASDAQ is holding up really nicely. I suspect because of Google. Now, one would need to listen to the earnings call for the Q4 guidance for them to get an idea of what really went down with AMD. But when you look at the AMD, financial results, you can clearly see here that the earnings were solid. They had a hit, they had a bit on revenue, they had a bit on EPS. Gross margin was also high. They indicated that they have a number of products that they're also going to get into. The data center segment revenue, which also I was mainly focusing on, also was up about 122% year over year. And they also said that they are going to, this was due to the AMD EPYC CPU sales. Now, when you go further into the report, they said, of course, they had a recent event this month where they said they are going to partner with various companies like Dell, Google Cloud, HPE, Lenovo, Meta, Microsoft, Oracle Cloud Infrastructure, Supermare, and AI dealers. So it could be maybe, people are still not convinced that AMD will manage to put up competition against, competitors like NVIDIA, possibly also competitors like Google, which has also indicated that they are going to aggressively get into this AI space. So we are yet to find out what could happen. Now, I didn't listen to this conference call, but the conference call most likely is one of the reasons why we are down in after hours on AMD. Yeah. Now, today, we have earnings coming out from Microsoft and Meta. These earnings are expected after the bell. That is after market close at around 11 p.m. So keep an eye for that, guys. But otherwise, let's move over to the MT5 and see how the charts are looking like. So we're going to start with Bitcoin. Just as we've discussed previously, I indicated to you that Bitcoin was actually in, just a moment, give me a moment, share my screen. Screen taking long. Okay, so this is what Bitcoin is looking like. You have very, very bullish structure on this pair, a bit of buying, then we see Bitcoin getting into a range, okay? And then after getting into that range, we then see Bitcoin buying again, okay? Okay, I think my MT5 is frozen. I don't know why. Okay, all right. So the Bitcoin, the story begins from around here. This is around 6th August. We saw a bit of choppy price action, and then on the 1st of October, we saw two big strong candles, bullish candles. Then Bitcoin got into a range that was between late October to about January. And then January 2024, Bitcoin broke out, and then it has been in a range from February up to October. Bitcoin has just broken structure. It broke structure, and we can see that from the area where it broke structure here, we are now seeing Bitcoin trading at around 73,000. Bitcoin is looking very, very bullish, and I'm very bullish on Bitcoin that we are going to see it moving higher. Okay. Right now it's trading at 72,000, and we are just at the start of a potential massive rally on this asset. So now, how can you get in on Bitcoin? You can actually trade Bitcoin on FX Pesa. You can already see here that we are now above the previous all-time high, which was in 2021. Bitcoin is now trading in an uncharted territory that could allow it to trade as high as 100K. I know this is crazy to some of us, but you see this happening. So how can you get into the action? If you don't have an account with FX Pesa, open one. You can open an account with FX Pesa, a premier account where the cost of trading is low. You just need a minimum deposit, I think, of $100 for that, so that you can get in on Bitcoin. Now, the link for opening up an account is in the bio. So just look for the link, and then you can open up an account with FX Pesa. Now, when I look at the Dow Jones right now, I have almost a falling wedge set up, and I'm expecting us to potentially break out of this falling wedge to trade towards these areas here. Dow Jones has previously performed a bit, has seen it selling a little bit before the election. We are now down about 3% from the most recent high we saw for the Dow Jones. And this is now a time to potentially look for buys on this pair, rather on this asset, towards these areas here into the new year. Now, going over to the NASDAQ is quite bullish. We have been seeing a bit of choppy price action for the NASDAQ, but I'm looking for a potential break for the NASDAQ. Just yesterday, we were able to break out of range there that was between 20,500, 20,309, and right now the breakout has occurred, and I'm expecting NASDAQ to possibly aim for 21,000, possibly during election time and before we get the electoral college voting beginning in the US. That's in mid-December. So for now, I'm bullish on the NASDAQ. Now, today is the 30th. Tomorrow is the 31st. 31st, we are going to get Apple earnings. Apple earnings are going to be a key driver for NASDAQ momentum. Previously, the earnings we've gotten from Apple have been like the NFP for currencies. Whenever Apple's earnings are strong, the NASDAQ usually goes well. So I think if we do get strong earnings from Meta and Microsoft today, which of course we cannot guarantee, but if we do get them, then I believe that NASDAQ will mount an uptrend that would see it crossing 21,000 and catching up to the Dow Jones and the rest of the indices. Sorry guys, let me just all right, so that's it for NASDAQ. Let's move over to gold. So for gold, gold just yesterday broke out of an asymmetrical triangle. Gold's price action and structure has remained very bullish. We've been looking at mostly buys on gold during these snapshots, and even at the moment, I'm still bullish on gold. I'm expecting a potential retracement now and then from gold, but we are still going to see more buying momentum staying there. Now, you can also clearly see that the last time we got a crossover for gold was in July. That was the last time we have gotten a crossover for gold. Now, this is something very important to take note of. Gold last made a crossover in July. Ever since gold made a crossover, a bullish crossover, it has never had a bearish crossover. This indicates to us that gold is going to stay very bullish. It's going to stay very bullish. And you can also see that the distance between our 50-day and 200-day keeps widening. The wider the two moving averages get, the longer period and a short-term period moving average, the stronger the trend. The closer they are to each other, the weaker the trend. So the stronger the trend, the wider the averages. So you can see gold's moving average has not been as wide as it is now. You can see how wide they are, and it does not seem like there's a chance for us to get a crossover anytime from now. So for gold, I might want to wait for a retracement, possibly maybe back to this area here. That is after NFP. And then I will then enter a buy for me to aim for 2,800 for gold. Now looking at GBP/USD, GBP/USD is bullish. We are seeing it, if you look at the Fibonacci retracement that I've added, taking into account that this could be our swing low and this being our swing high, we are aiming for a potential retest of our Fib retracement of 223.6. That's around 1.30326. And of course, if we do break through there, then we can aim for buying GBP/USD towards this area of 1.31085. Now, I do not expect us to get a very, very strong NFP number. So if we do get maybe an NFP number on Friday that is strong for the dollar, the most we're going to get is a potential sell that will then reverse towards a buy for GBP/USD. Taking into account as well that next week the FOMC is likely to cut rates by 25 basis points, I might not want to increase my bets on buying the dollar, but I might want to increase my bets to buy GBP in favor of GBP aside from the dollar. Now, Euro/USD is currently in a key demand zone on the H4 time frame. We have tested our lows that we tested previously on the 2nd of August, and we're already seeing a number of liquidity grabs back into that box or the demand zone where we have our bullish order block on the H4. We are having a bit of hesitation, however, to break this level here. That is around 108,255. At the moment, there seems to be a few signs that Euro/USD is staying quite strong and could possibly attempt one more time to take out that level of the Fib retracement, which is around 108,697. However, if we do fail to do that, then I think we shall once again move back to our demand box. I would say I'm relatively confident about buying within this area here. I do not see anything that is going to warrant a very sharp downtrend for Euro/USD. We are already down quite a bit from our record highs that we got earlier in late in September. We're down over 440 pips, about 3.92%. So I believe now the buyers are going to try and support the euro for us to test higher levels. Now, I think that's pretty much it for the currencies. If there's anything in particular you need me to go through aside from those, we can go over them. I want to save the best for last. We have NFP on Friday. Don't be too overzealous, guys, on the markets. NFP is a much bigger deal than your GDP, okay? So you can stay patient until Friday. Good morning, Hillary. Hillary, you're asking, morning check USD/JPY. Okay, so for USD/JPY, we're going to check it out from the trading view because that's where I have its chart. Good thing Hillary has brought up JPY, the Japanese yen. Of course, you're going to be with Rufus tomorrow to take you through the snapshot. But of course, Rufus the snapshot starts at 11 a.m. So most likely by the time you see Rufus, these people will be through meeting. So maybe I can handle it. So now tomorrow, Bank of Japan is meeting. And they are widely expected to keep their interest rates at the same level as they are, which is 0.25%. Previously, we've gotten a number of comments from the Bank of Japan speakers, and this is more in line with the fundamentals. So the Bank of Japan speakers have previously indicated that they are going to go slow with hiking rates. Now we know that what that means is that whenever a bank official says that, they usually will spell weakness for the currency, right? Yeah. So if we say that we are going to stop hiking rates for the dollar, right, or we are going to stop hiking rates in the US, the dollar will weaken. It won't crash, but it will weaken. Okay. Yeah. So the same thing with the yen. There are a number of comments that have been made by the Bank of Japan officials, such as they are going to go slow with the rate hikes. They also mentioned briefly here that there are more rate hikes on the way. Giving a bit of vague guidance, but the big move that we are seeing on USD/JPY today is simply because of the expected delay in hiking rates. Now, tomorrow, Bank of Japan is going to be meeting. Now, if tomorrow's meeting by Bank of Japan is going to be very, very crucial for how to trade the USD/JPY going into the month of November. If they indicate that they are going to, if they hike rates tomorrow, definitely we are going to see USD/JPY selling. Okay. If they again reiterate or reinforce some of their earlier comments about going slow, then we could see a bit of strength for the USD/JPY. Now that is on the fundamental side of things. Now I want to speak on the technical side of things. Now on technicals, guys, let's be real. If you look at USD/JPY right now, okay, USD/JPY is up quite a bit. Okay, we are currently seeing it testing. It has broken through many levels of structure. First of all, it broke through 149. We saw it rallying. It broke through here 150.850. It continued rallying with very strong price action. However, I do not expect USD/JPY to reach as high as 161. That's unlikely to happen. So, between now and maybe say mid-November, we could see this trend starting to take shape for it to reverse back down. So we could see maybe something like this happening again. What we saw in July, we could then see the same thing possibly happening around, between now and possibly November. Okay. So to those who are swing trading, okay, for those who are swing trading, I think USD/JPY is sitting at a good level for a swing sell, in my opinion. But now, the fact that the Bank of Japan officials are always making comments almost every other week, this could affect how strong that trend is. So it could be a choppy downtrend, especially if the DXY taps out. As soon as the DXY taps out, then I believe USD/JPY will also start declining. Yeah, but for now, if I'm to trade USD/JPY, I would have to be looking for buys. Yeah, just based off the value of the DXY plus also the comments that the Bank of Japan officials are making. So I hope that helps. Next question. So when you look at the DAX, DAX, I think I had mentioned earlier to you, DAX is staying quite choppy right now. However, the earnings for the automakers in Germany are affecting these things. Okay, the automakers are losing money. They already sent. I think we covered that in one of the snapshots some time back. I indicated to you that some of them released profit warnings. Volkswagen released the profit warning. Mercedes-Benz, Daimler also released the profit warning. The demand for their vehicles has taken quite a bit of a hit, and it's dragging that DAX. Okay. However, we still have a number of other components that could allow the DAX to recover. Of course, the consumer discretionary, the consumer staples, and of course, you have all these other companies. You have the pharmaceuticals. Most of those will allow the recovery. But as of today morning, this sale you're seeing is because of Volkswagen. Okay, Volkswagen reported that as a very sharp dip in their earnings, and it's taking a big hit on the DAX. Okay, so Yeah, so you can see here, EPS missed by 5.7%, earnings disappoint as shares plunge to 24-year low. So you can check that out in your free time. The stock is actually up. Right now, I'm seeing it's up about 1.95%, but it's not the only company. There are going to be several other companies that are going to be coming out indicating that they already released profit warnings. Okay, they released them before. Typically, even in Uganda, even in Kenya, companies release profit warnings. It's in law, in regulation, they have to do that for them to inform investors that the upcoming quarter wasn't too good. Just so you know, this is how we did in the previous quarter. Yeah, so they released, Mercedes-Benz released, a number of other companies released. So DAX still steady uptrend, but choppy for now to the downside. Okay, next question. Okay, so I think that's pretty much it. Euro USD, I think we've already covered it. I indicated to you that we're expecting some buying within that demand zone around here. So we expect the buying to begin within there. You'll expect a bit of bullish momentum. But for now, wait for NFP and, of course, GDP, which will give us a better direction of where we can expect the markets to move. All right. Okay, guys, I think that's it from me. Let's meet again tomorrow. Right, let's meet again on Friday for the NFP. Cheers, guys, and happy trading. Bye-bye.